Hey guys, welcome back to the channel. So if you follow me here, you will know that I talk a lot about investing, and my purpose here is to make sure that you have the best information available so that you can make not just the best financial decision, but also the best investment decision as well. Now, if you are using Trading 212 or eToro or Free Trade or Hargreaves Lansdown to buy stocks individually, then you've probably heard the news that Apple will be doing a stock split at the end of August. What I want to do in this video is basically talk about what that basically means and answer the question of should you be buying stocks before the split or after the split. And if you stick towards the end of this video, I will be telling you and showing you what I've done personally. Now, it goes without saying that, guys, please do not take this as financial advice. Yes, I'm a qualified financial advisor. However, I do not know your personal circumstances. So use this as a basis to do further research and come to your own determination. With that being said, let's go. All right, now stock splits are not uncommon. Stock splits actually happen all of the time. Apple have actually done stock splits 4 times prior to this one that's going to happen at the end of August. And oftentimes it's done for good reasons. First and foremost, sometimes the companies feel that there's going to be huge growth within the business and they want to basically make the share price more attractive. And the second reason kind of leads into that, the share price being more attractive. Now, I know that I've said on my channel here a number of times that you should never buy a stock simply based off the stock price. The stock price is simply just a snapshot of the value of the business at any given time. It's what people are prepared to pay in exchange for a share in that business. It doesn't tell the full picture. However, the mentality and the psychology around price still applies to stocks. Look at it this way. Tesla, and I speak about Tesla a lot. At the moment, to buy Tesla stock, $1,500. It means you've got to have that level of money if you're not buying fractional shares. Now, for many people, they would feel more comfortable buying Tesla stock if it was £500 or $500 per share. The same thing applies to Apple. At the moment, they are currently trading at $438. You would feel more comfortable buying a share in Apple at, say, $100. It's just psychology. And this is one of the reasons why share splits, stock splits happen, because sometimes the company just wants to make that share price seem more attractive to potential buyers. And this is really important because now with the rise of Trading 212, Robinhood, Free Trade, retail investors like you and I have so much more purchasing power because we no longer have to wait for that barrier of entry to lower, i.e. we don't have to have 1,500 quid to invest in Tesla specifically. We can literally invest 50 quid and get a piece of Tesla, and the purchasing power is enormous, and being able to tap into that for a company is actually quite important. Now, what does it actually mean when we talk about stock splits? If you own or have bought Apple stock and the stock you bought for one share is worth $400, they're going to be reducing the share price down to $100 and giving you 3 additional shares so that you're not losing any value. Now, that does not mean that you're making free money. There are a lot of videos on YouTube that are misguided saying that, well, you're going to get 3 additional stock, therefore it's going to be worth more money. No, you're going to have 4 stock because you currently own Apple shares at $400, but each individual stock that you own will be $100. So you'll have 4 times $100 for shares. So you're not actually making any money, you're not losing money. It puts you in the same neutral position. Only difference is you're going to have more shares. And opposed to you having 1 share, you're going to have 4 shares by the time this split is basically done. So I mentioned previously that Apple have done this before, and in fact they've actually done it on 4 separate occasions. They did it back in 1987, back in 2000, 2005, and the most recent one was back in 2014. Now, what happened each time that they've previously done this, it's quite interesting. It's something that you should bear in mind in your decision of whether you should be buying before the split and after the split. And it's something that I've definitely considered myself, and it has driven my decision of what I've decided to do with my investment into Apple, or whether I acquire shares now or whether I wait. And you'll learn a little bit more about this at the end of this video. But let's have a look at the 4 instances of when they have done this in the past and the impact that it's had on the share price. So back in 1987, I can't remember what the ratio was, I think it might have been 2-to-1, they did a stock split. And in the subsequent 12 months, the share price rose by 8%. So again, it's all about that attractiveness of the share price. Back then, people felt, oh great, I can get Apple at a discount or a seemingly discount, and people bought more stocks and the share price rose by 8%. The next time they did that was back in 2000. Now actually, this is a juxtaposition to what I've just described, because back in 2000, the stock price actually plummeted 60%. But we have to remember that that was actually the dot-com bubble. So it wasn't just them reducing the share price that kicked it all off. There was a real crash in the market. There was a real crash in the dot-com bubble. So an outlier, but it still happened, and that isn't to say that it can't happen this time around, especially with what we've gone through with COVID. It is anybody's guess. Now, the third time that they did this was back in 2005, and back then, over the preceding 12 months after they'd done the stock split, the share price rose by 53% in 12 months. So again, it's all about the attractiveness of the stock price. The most recent time that they did it back in 2014, they saw a 38% rise in the share price in the following 12 months. Now clearly past performance is no indication to what's going to happen right now or future performance. However, we can have a look at this as a precedent, and we can take a view of saying, well, can we guess what is going to happen? Now fair enough, there are COVID-19 issues right now, there are global economic problems, and there are certain things that are outside of our control that could impact and mean that actually the share price does not surge over the next 12 months. However, it is really, really important, and I cannot stress this enough, guys, that if you are going to be buying before the split, and I'll tell you what I've decided to do and why, that you understand why you are planning to do this. Just don't do this because you feel, oh, it's a quick way to make a load of money. You could be wrong. I could be wrong. You could lose a load of money, but use it as a basis to do some further research. Do you really understand the position that Apple are in right now? Do you understand how the business might perform with the launch of the next iPhone? Are there any challenges that the business are facing in terms of production? You need to have an answer to all of these questions, and above all, you cannot allow emotion to come into this decision. You have to be level-headed and grounded enough to make a pretty business-like decision. And the decision has to be, do you believe that it's going to make money, or you can make money from this? Yes, no. If the answer is no, don't do it. If you believe yes, then you need to ask further questions. Are you in this for the long term? Are you in this for the short term? Because guess what? If you are doing this for the short term, and guess what, we are wrong, then that short term decision could be a pretty painful one to take. So again, when you're investing in the market, and I've said this before, you need to be taking the long-term view. Just don't do this off a whim. Just don't do this off, oh, I could make a load of money. And look, if things go extremely well in the next 12 months, you could make a load of money, but you could also be wrong. So it's very, very important that you don't make an emotional decision. If things go south, if we're completely wrong, what is your plan? Are you going to sell at a loss, or are you going to hold? Now, for me personally, and this is what I'm going to tell you what I've done, I've decided to buy. I've decided to buy because I believe that Apple as a company, well, it's the richest company on the planet. They have got the largest cash reserves, or one of the largest cash reserves as a business on the planet. So for me, I'm buying for the long term. Yes, I might be in a position where I am going to make a lot of money because I have bought stock right now, and if we see a 50% rise, a 20%, a 38% rise, then great, I make money. However, I'm looking to hold this stock for the long term, not the short term. So it's really important to have a grounding in research, a grounding in an understanding, in a solid understanding of what they do and how they can help you reach your goals. And I speak about this all of the time. You have to have a goal when you're investing. Why are you investing in Apple? Is it simply just to have it because It's a talking point. Everybody owns Apple. If that is the case, that isn't good enough. What are you going to achieve by owning Apple stock? Is it going to move you closer towards your goal? If your goal is to create wealth, okay, does Apple really add value to your wealth creation journey? These are only questions that you can answer, and these are answers that you need to have for yourself before you go and commit your hard-earned money. And it goes without saying, please don't do this if you do not have an emergency fund. All right, don't go and start putting in your life savings into this thinking it's going to make a load of money, because guess what, it might, but if it doesn't, you want to make sure that you've got something, a pot of money at least, to tie you over so that you're not reaching for the branches using credit, overdrafts, loans, credit cards, all these kind of things. So it's very, very important. Make sure you've got your emergency fund in place, and make sure that you can afford to put this money away for the long term. Now, that's been my decision. Again, like I said at the beginning of this video, please use this as a basis to do your further research. I'd love to know what your thoughts are. Were you intending to buy before the split? Were you intending to buy after the split? What are your reasons why? Guys, a lot of this is taking an educated guess, but it is a guess nonetheless. So I'd love to hear your views. Do you already own Apple? Are you excited? Are you going to be looking to buy more? What do you feel about owning Apple right now? Let me know in the comments below. But guys, thank you so much for watching this video. If you've not bought tickets to my event, it is literally on the 15th to 16th of August. There's a week away now, and we are covering 10 financial topics: how to buy a house, guide to that, how to start a business. We've got Paul C. Brunson speaking. He's a celebrity, a serial entrepreneur, very, very successful guy. He's going to be sharing his expertise. We're going to be talking about how you get invested in the stock market, how you get invested in cryptocurrency, how you start investing in property, the different ways that you can invest in property, how you can move money around efficiently and use things called momentum investing to build a buy-to-let portfolio. We're going to be going through budgeting, tackling debt, improving your credit score, a whole host of topics. There is a link in the bio to get tickets. You can buy tickets to the Saturday or to the Sunday. It's a digital event held on Zoom. I would love to see you there. And if you want to work with me one-on-one to build an investment portfolio, I'm also going to leave a link in the description as well. But until next week, catch you later.